Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at Verified Investing. I'm here to go over all the charts. We've got a big day today, and again, pre-holiday on July 4th, but Jerome Powell speaks at 9:30 a.m., and then 10 o'clock we get the JOLTS numbers. Now, JOLTS numbers last month were 8.059 million. Those are job openings. That's how many job openings there were according to the stats. This month, or based on the end of last month, it's expected to be about 7.8 or so. So we're going to watch that number. It's 10 a.m. I do think it will have an impact on the overall markets. In addition, Tesla today, basically we're finding out that shipments in China are down about 24% year over year. After 5 straight up days, Tesla is now pulling back just a little bit. In addition, the deliveries numbers for Tesla will be out later today. So without further delay, let's get going. All right, right in we go, guys. Let's get right to the charts. Let's see what's going on here pre-market. I do have Tesla's chart up, but before we get into Tesla, let's go to the S&P 500 and look at the pre-market data. So overnight, we did see that the market started to come down a little bit. This is about 4 in the morning. We were trading down here. That's from a closing print yesterday right here. So you can see, again, we are down just a little bit. Yesterday, we were net positive, but this is the kicker, guys, is that yesterday we had literally the Mag 7 up on the day. They led the market. The Russell was down 0.8%, which doesn't include those Mag 7. And that, again, just tells you the breadth of the market is horrendous. In fact, to members in Smart Money stocks and ETFs, I was posting charts last night. McDonald's, Disney, all breaking key supports. The rest of the market looks atrocious. But nonetheless, as long as those top players go higher, the markets, at least the S&P and the NASDAQ, are able to go higher. All right, let's take a quick look here at a couple of the other key things that are concerning me this morning. The DAX is one of them. This is the German stock market. Really, ever since what's going on with France has been going on, I've been bringing this chart up more and more to you because I do think it matters. And what do you guys notice about this pattern formation, right? So clear wedge pattern. We know it broke. And then what type of pattern formation is this, right? That's a classic bear flag. Look at what's happening. Last night, the DAX fell, which again is the beginnings of a bigger breakdown in terms of the bear flag. So that should take us lower. The question is, does this influence more markets? Does it influence the U.S. markets? We will find out. In addition, the CAC, which is the French stock market, came right back in. Take a look at this. We have this longer term trend line right through here. We hit it here, we hit it here, we bounced all the way up here. We now, as of yesterday, closed right on that trend line. If that trend line gives way, this stock market is going much, much lower. It's already down about 10% off of its recent highs. And again, that's a 10% correction while the U.S. stock market basically remains at all-time highs. Now you can say, well, what's the big deal here? This is France, this is Germany, all that stuff. But I'm here to tell you it actually does matter because there's debt issues all over the world. If you get one economy out there that has trillions in dollars of debt to start to go down a bad rabbit hole, you know what's going to happen? It's going to spread like a wildfire through other countries, eventually attacking the U.S. There's only so much the Fed can do, which brings up the dollar yen, which continues to be incredibly resilient as well. The dollar yen just keeps marching higher. This is your chart of the USDJPY. Remember, the higher it goes, the weaker the yen. So this, look at this. The yen just keeps weakening against the US dollar. I do have my level where I think intervention will occur, and that's going to be right up here. Using the charts, I think, again, we are getting very close to where the Japanese central bank, even though they've been warned not to do this, they're going to have to step in. And remember, when all houses are burning, no one's going to be like, oh, let me help that house instead of my own house. And I want to be clear on that. So sure, the U.S. is saying, hey, don't do this. Don't intervene. Don't be currency manipulators, Japan. But when their stuff is on the line, of course they're going to intervene when they have to. And my guess is we keep going up. You're looking at around 163 to 164 for that key intervention. All right, so a couple other things to go over here, guys, on the charts. Flipping over to the NASDAQ chart. If we flip to the daily here, the big thing on the daily chart is that we have this bigger wedge channel pattern. And if we flip to the monthly, guys, you can see it very clearly here. Look at the beauty of this chart. So this implies, and this is implying means probability-wise, that if we hit here and we pulled back and we at the lows we went higher and at the lows we went higher, then hitting here, probability should mean we pull back to the downside. Now again, are we going to go all the way down here? Who knows? Honestly, I don't know. I do think we're due for a pullback. We talked about the blackout period yesterday, how that's coming in now for S&P stocks, not able to buy their own stock. So that's a huge, and probably one of the biggest buyers of stocks right now over the last few years has been individual companies buying back their shares. But nonetheless, that's the chart. And then obviously this is the chart of the NASDAQ 100. If we flip back from the monthly to the daily chart, we still have this pattern here. This is a topping tail right there. Topping tails are reversal patterns on, again, charts. So it's telling us that there's a reversal potential there for a high. Now, let's just talk about this. So if you have a topping tail, let's draw one in, right? Bear with me here. There's a topping tail. How do you negate a topping tail? Like for instance, as a technician, when you get a signal like this, what do? You say, okay, well, we have this topping signal. All of a sudden, bias goes from strength into a bearish bias. But what happens, or how do you know it gets negated? The way you know it gets negated is if any candle closes above the high on a daily basis. This is a daily chart, so you use the daily closing basis. Any close above that high would then negate the bearish bias, and you flip back into being more of a bullish bias for a move higher. So that's right up there, and that's the level we are currently watching. As long as this candle remains intact and we don't violate on a closing basis, then the bearish bias takes control. And again, that's classic TA, simple, right? Just a matter of where the daily closes tells you which side to look for on the market. Couple other charts here that we want to go over. Let's take a look at the US dollar. Jerome Powell speaks today at 9:30 a.m., so less than 30 minutes away. The dollar is literally being held between a key level here to here to here, and then these little lows right down there. So my guess is we do see some sort of movement. The question is, do we get a breakout on the dollar, or does it get rejected and go back down into this level? And if it gets down there, then does it break down into this zone as well? Remember, a lot of people were asking me and have been asking me, why is the dollar so strong? Why isn't it going down with all this money and the U.S. debt and all these other factors and the Federal Reserve potentially cutting rates and then cutting rates even more next year? And the answer is very simple. The U.S. dollar is basically against every other currency out there, the euro, the yen, all of those currencies. And it's about what the other countries are doing. So you have, Europe's lowering rates, Canada's lowering rates. They're all weakening their currencies. And so even if the dollar is technically weakening in our buying power, which we know from inflation it is, it's still versus the yen, it's still doing much better. So it's strengthening against the yen. And that's what this is showing us, is that against other currencies, it's strengthening. Doesn't have anything to do with your buying power, my buying power here in the U.S. Okay, next up, let's go to a couple other charts. The 10-year yield, in fact, let's bring that up right now. Let's see what we have on that. That actually had a big move yesterday, as again, there's been some concerns that, and again, this is more going in, not political whatsoever, but with Donald Trump being favored more and more to win the election, the idea is he's going to impose tariffs, which tariffs can be inflationary. Right? Again, it's basically saying, hey, if you're gonna send goods here, we're gonna throw 20, 30, 40% tariff on it. Well, guess what? The consumer ultimately pays a chunk of that, if not all of that, because prices then have to go up to compensate for that. So the problem is that thought process of that happening is causing rates to push up. Now, we do have major resistance right around this 4.6 level, and eventually I do think rates go lower, but nonetheless, that's just giving you a little kind of an understanding of why rates, again, have rallied since that debate just late last week to the upside. And it's a pretty dramatic move, right? We actually had a bearish pattern here of like this, and then that pattern failed. This would be my target zone. If Jerome Powell comes out and is still hawkish today, maybe we pop up into this level. At that point, I think it's a short back to the downside. I do expect the economic data, the jobs data this week, to be much weaker overall. Okay? Couple other charts here. I promised you guys Tesla, so let's not forget about that. Ooh, Tesla just rocketed higher here. All right, so this is the kicker. Great move, and I have a level for you guys. All right, I wish I was at my computer to trade this, actually, because this looks like a potentially going up to my key level here. I think 228, if I remember correctly. So Tesla this morning was down on the fact that shipments from China were down about 24%. But they were going to announce deliveries later today. I'm just going out on a limb here, but my guess is they just announced deliveries, and that's why the stock is popping dramatically. It must be better than expected. So that, again, is a big move. Now, if we take a look at this chart here and we see what we have on the daily, we're now trading around 220. Look at this level up here, guys. If we zoom out on this chart, look at this big, amazing channel. All right, from going back from 2021's and even going back to 2020 lows, look at this. So every time we hit here, look at the move up. In fact, we were long Tesla here when it ripped up here. Now look, right up above 220 at about 225 to 228, we have that upper range. So if we get up into that range, I think Tesla is a short there. Not anything to do with the company. I couldn't care less. Could be any stock. This could be XYZ Corporation. It's the chart that matters for us. All right, doesn't have anything to do with my love or whatever for Elon Musk. He's a cool dude. But nonetheless, this is the level right here on a technical basis, whether this was a commodity, a crypto, or a stock, that's the level. Always remember that, guys. You want to become indifferent. If you want to be the best investor in the world or trader in the world, you don't care what a company does. You don't care about fundamentals. You don't care about all that stuff. You literally trade the charts. And the more I do that, the more I take my brain and my thoughts and my hearts and my feelings away from trading, the better I do in terms of making decisions that make me money. Just the nature of the beast here in investing. Okay. Couple other things here on the radar. I don't see much else going on. We'll go over in just a minute the commodities and crypto charts, but quickly let's go to our YouTube giveaway and our Twitter or X giveaway. And as you guys know, we don't have this up here. So let me see here. We'll do a quick Wheel of Appreciation run. But nonetheless here, guys, we're going to do this. Yesterday it was the live trading room. The live trading room was given away. So what we're going to do here is give away a new opportunity here. Okay, so here we go, guys. Let's go right here. Who's winning the live trading? Apex Live Day Trading Room, which yesterday had, I think, 4 winners out of 5 trades. And here it is, Edward Hanrahan. I apologize if I'm messing that up. 44143. Congratulations, buddy. 1 month to the Apex Live Day Trading Room. Reach out to support at verifiedinvesting.com. All right, over to the Wheel of Appreciation. As always, guys, let's quickly do that. Let's spin that to find out who gets it. Oh, look at that. All right, smart money, 3 months of smart money stocks and ETFs, $450 value, folks. It's amazing. Literally every day I'm doing 2 videos. I do a morning video and an evening video, trade setups and charts posted throughout the day, and of course, trade signals with entry and exits all there. So that's what we're giving away tomorrow. Wonderful stuff, guys. On that note, I want to get back into the charts. All right, so as we go into this here, let's take a look. I do want to go through Bitcoin's chart. Bitcoin right now remains at resistance. It's only a minor level, but nonetheless. Oh, before we do that, folks, what I want to say is we're going to just take a 30-second break to take a quick look at the crypto service, Smart Money Crypto. I always appreciate it. Right now, we're crushing it. We're in Cardano long in the money, something like 15%. We've got a bunch of these that are just crushing it. So here's a little quick side note commercial. Take it away. Hey, everybody. My name is Gareth Soloway, and this is Smart Money Crypto. In this service, you're going to get trade signals, buy levels, sell levels, everything you need to be able to conquer the crypto markets. In addition, videos almost every single day, probably 6 days a week. So literally, you're going to get them even on the weekends. In addition, what do? I post up chart levels, constant flow of information from me to you, morning, noon, night, weekends, whatever it is. I am there scanning charts, finding the technical analysis and data points to give you. This isn't about meme coins. This isn't about hype. This is the data just for you guys to be able to conquer the crypto markets. Alrighty, guys, back in we go. So again, we're going to look at the Bitcoin chart here. So let's flip over to the charts and take a look. We see Bitcoin has this down-sloping trend line, which is parallel to this lower one. And that is, again, what we're battling right here. You can see we pierced it yesterday. We're piercing it again today. That is current resistance right around 63,000. If 63,000 does end up breaking to the upside, you have upside to about 67,000 on the chart. On the downside, we have this upsloping trend line right here. Notice how price came down. It held multiple times, got a little bit of a bid. If this one breaks right here, you're going down to about 56,500. So right now, this is what we would call a wedge pattern. It's kind of getting to the head right here, so you're going to either have to break out or break to the downside. Be ready for that. It usually will be a fast move in one of those directions. So again, just to recap, we get above here, quickly moves to 67. If we get below here, quickly moves to 56.5. That'll be your next key support. All right, onto the gold chart real quick here, guys. Gold is flattish on the day. Same sort of thing. Look at the wedge pattern. What wedge patterns tell us in technical analysis is that price was lower here and it was higher here, and then everything since then is just consolidating in a tighter and tighter range. Think about it like this. You're winding that spring for a big move in one direction. So it's either going to be a break here, in which case, boom, or it's a breakdown, in which case it goes to technical support at around 2190. So always remember, consolidation patterns, whether they're bull flags, wedge patterns, whatever it is, it's like winding that spring for a big move in the next direction. The question is, which direction? With wedge patterns, there can be slight edges where you can say, oh, it's bullish or a bearish wedge. Bull flags and bear flags are much easier to know, right? Because it's a very defined pattern where you have the down move and then the lower consolidation here, and then it's very favoring to the downside with a high percentage. Wedge patterns are a little trickier. I still favor the downside on gold, but again, I just want to make it clear there's a little difference in probabilities between wedges and tight bull or bear flags. Next up, we look at silver real quick. Silver's just hovering here, still below this key level right in this zone. This is still resistance. We broke below. We're now, and that would be a little bit of a bearish consolidation pattern. And so it still favors a move down right to here. That's my buy level. Wherever that trend line is when price hits it, if it hits it, I should say, that becomes a level where I start to inch in on silver. All right, next up, let's take a look right here. We have natural gas. We'll touch on natural gas here, guys. I've already drawn in some lines here, but you can see we continue to break down on natural gas. This is today so far, the sixth down day. 1, 2, 3, 4, 5, 6. If it continues, very clear target around 215. This is that inside area of support right here. This is also what we would refer to as a potential for an M pattern. All right, M patterns are bearish patterns on charts, but they offer long opportunities. Just like any pattern, there can be a move and you actually go long for an inverse bounce. What I mean by that is here's your M, right? So here's your very clear M. We're now coming down. If price continues to decline into this level, what do? You look for a bounce from this level back to the midpoint of the M. You see that? That's generally what you'll see in MA patterns. And so ultimately, if you buy here and it's oversold, you want to get a bounce back here. The key is not being too greedy. Don't look for something where it's just going to keep going like that. That's unlikely. You take profits there. You can even look to short that if you're aggressive for the A completion, which goes much, much lower. I don't know if that A pattern will complete. We have to still see if the M even completes, but that's how you trade an MA pattern. All right, so all these little nuggets, guys, these are key nuggets of education. We teach them right here at Verified Investing. We're a data-driven company that's all about charts, technical analysis, not hype, all that BS out there that you're going to get from mainstream media narratives or social media hype. This is where it is. I'm going to give you the facts straight based on probabilities. Lastly, looking at oil, guys, oil is pushing a little bit above my level here, but it's already starting to pull back. Look at this three-peat level. All right, we see three trend lines converging right here. This is an overbought chart. By the way, I was thinking about it. Why is oil rallying? Well, part of it was hedge funds were overly short down here, so some of them are covering. The other thing is we have July 4th coming up in just a couple days. They always jack up oil and gas before July 4th because, again, they know like millions of people are going to be driving. They got to get that extra money out of your pocket, and so they push oil up going into that. And then ultimately what ends up usually happening is after July 4th, you'll see some sort of pullback, and that is my guess what is going on. So the hedge funds have covered a lot. You get the July 4th move, and then after July 4th, or even the day before July 4th, since it kind of tops out there, you can get a good down move. And I'm still factoring this in. The bigger macro picture for me is that oil will head a lot lower as the economic data weakens. We're going to see the jobs numbers later this week. JOLTS today, as I said, and just in a few minutes, we're going to have Jerome Powell's speech as well. So there's a lot of potential things going on here. All right. So that really concludes today's game plan. As always, guys, I want to just make a mention here that here at Verified Investing, we're going to continue to fight for you, the retail investor, to make sure you know all the nuances that the institutions know, the technical analysis, and all of that type of thing. All right. So on that note, guys, I bid you the best of farewells. You guys have a good one, and I'll see you tomorrow. Take care.